Can you
Go
guys
for
hear
it.
me?
Yep.
Cool, cool.
Type in
Well,
the
what's up?
chat to respond to Gabe.
I don't have the chat up, so Trent, if you can, if anyone has questions, if you can call it out.
All right, well, let's do this. People can unmute then. Let's go ahead and unmute yourself, Gabe. Go ahead and unmute yourself, Gabe. I made it so everyone can unmute.
You guys hear me?
Yep.
All right, perfect. All right, guys. So today we're going to learn a little bit about Bollinger Bands. I'm going to teach you what Bollinger Bands are, how I use them, and basically the common use of the Bollinger Bands just across the board from any trader's perspective. But first, we got to understand what this actual indicator is and the meaning behind the use of the Bollinger Band. So the Bollinger Band is basically a entry and exit indicator tool. And this lets you know whether or not, for instance, can you guys see my mouse move on screen?
Yep.
Okay, cool. So for instance, Bollinger Band in this area, which I will explain a little bit later, will let you know it's an entry zone. Over here, this area of the Bollinger Band, which again, I'll explain a little bit later, will let you know it's the sell zone. So the Bollinger Band essentially lets you know when there is an entry and exit point. Not only that, it also lets you know where the trading and the price action is in a consolidation mode, which is what I'll later call no man's land and show you what that is. The bands, as I mentioned, is often to determine whether or not the stock at that certain point of time is overbought or oversold. Using the bands by itself, though, is pretty tricky. It doesn't really give you all the answers, so you never want to use this by itself. If you notice on the bottom of my screen, I have a volume bar, I have a MACD. I don't use the momentum indicator too much, we can take that out, but I use the RSI as well. So combining the MACD and the RSI along with the Bollinger Band gives me a clear indication on whether or not the trend is going up or down in my favor. For a quick example, you can see here, as we mentioned, this is a buy zone here, down here, outside of the Bollinger Band. You can see the MACD is starting to go positive at this point, and the RSI is starting to go positive at this point as well. So that's a conviction at this point to buy. And at that point, if you can see, buying would have been perfect and you would have rode the Bollinger Band all the way up with Visa. I'll get into a little bit later, exactly, why that's a buy point and how to determine whether or not to run it all the way up to the top of the Bollinger Band or cut it at the 20-day moving average, which is the Bollinger Band's mean. I personally use the Bollinger Bands as scalps, especially right now we're looking on the daily. You can use it for swing trades on larger time frames like the daily. But for instance, if we can switch this to, let's say, if we were looking for a scalp, we would go daily. I like to scalp on the 3-minute. So we can see, for instance, you can use it as a scalp. So Visa opened up outside of the Bollinger Band. So a great scalp at open would have been to buy puts for Visa because, as I will explain later, the Bollinger Band, if it's outside, it's considered overbought. And that means that it's going to have a sell-off, which you can see right here in Visa as it's doing. The Bollinger Bands, again, is a simple tool. If you don't overcomplicate it, it's used as entry and exits. You see something overbought, buy puts. You see something oversold, buy calls. It's that simple. Don't overcomplicate it more than that. So you're probably asking, like, all right, so how are the top and bottom Bollinger Bands created? What are they? What's that line in the middle? How come there's like a skinny, Bollinger Band here and a fat Bollinger Band there? That's what I'm about to go into with you guys. So let's go ahead and switch this back to the daily. Zoom out a little bit. go. All right. So Bollinger Bands in the middle uses a 20-day moving average. That is what we consider the Bollinger Band mean. As you can see, it's always in the middle of the Bollinger Band. No matter how wide the top and bottom of the Bollinger Bands get, this is always the middle average. So you can use this if you're playing calls from an oversold position as a resistance. As you can see here where my cursor is, this hit a resistance at the mean here, didn't break it at first and pulled back. So you can use that as a resistance, or you can also use it as a new support. Once it broke the mean, it became bullish and ran and came back down and tested the mean as support, came back up, tested the mean as support, and came back up. So that mean average is a great tool to use. As I mentioned earlier, if you bought that oversold position down here, whether or not you wanted to cut it at the resistance, and as you can see, when it got to the mean here, we had some sellers come in. Once it broke, it became super bullish. So at that point, do you want to add to your trade and ride the wave all the way up? Or do you just want to keep your trade the same and see, where resistance lies on the next, price level? So that mean is very important as a way of letting you know, should I get out of my trade that I'm in? And the same as it goes going downwards, the same with the cursor here. It's on an overbought position. So you sell your puts. It comes all the way down to the mean. At this point, should I sell my position if it's going to go back up? If I'm thinking that it's going to bounce as support, if I don't think that that's going to be support anymore and I think it's going to be resistance, do I want to keep my put and ride the Bollinger Band all the way back down? So again, that mean is very important on letting you know what to do with your position. The top and bottom Bollinger Bands basically are standard deviations. Right now, we have a 2 standard deviation Bollinger Band showing. I personally like to use the 2 and the 1. So I'm going to go ahead and show you guys what that looks like real quick. And you want to change the color of it because you want it to be different than what you currently have. And boom. So if you see here, now we have the 1 standard deviation, which with the 2 standard deviation gives you a more accurate look at the price action of this particular stock. So for instance, this is what I call no man's land. This is the consolidation area, which I told you guys earlier I was going to explain. No man's land is where you don't really want to add to your trade, but you want to manage it and see what happens. So if you see, the mean is right there in the middle as well. So the 1 standard and 2 standard deviation share the same mean. Anything that trades in between the top of the 1 standard deviation and the 2 standard deviation is considered bullish. So we see here, it's trading in between. That's bullish. Whenever it trades between the bottom of the 1 standard deviation and the 2 standard deviation, it's considered bearish. And that helps you identify the trend. If you see here, it's trading in no man's land. It's not bullish or bearish. It's consolidating. I'm also going to show you guys what a Bollinger Band squeeze is as well, which you can see here. The Bollinger Bands are super, super tight during this consolidation area because it's trying to decide where the next move is going to go based on momentum. Here, it kind of started out bullish and then went straight bearish. I would consider this maybe a bull trap or something of that nature, but you can see here, it consolidated, didn't give you a bullish or bearish trend until it broke. And once it broke over the top of the 1 standard deviation and started trading in between the 1 and 2, which gave it bullish. But as you can see, if I zoom in here, it also became overbought because it's outside of the Bollinger Band. So as I explained earlier, anything outside of the Bollinger Band is considered overbought and needs to come back inside the Bollinger Band. So you want to buy puts. And if you bought puts, basically how I would play this is this would be my first resistance and support area, which would be the top of the 1 standard deviation. If it bounces up off of this, I'm selling my puts. If it goes below this, I'm holding my put. And I'm gonna see what happens when it goes to the second area, which is the 20 moving day average. If you can see here, it bounced up and hit the top of the first standard deviation. Now I need to see on the next candle, if it breaks that top of the standard deviation, it's now becoming bullish. Why? Because it's trading between the top of the 1 and 2 standard deviation. I want to sell my puts. If that confirmation candle ends up opening below, I'm going to hold my puts and see what happens. So if we held our puts, we notice that the next candle drops below the mean, which is a 20-day moving average. So now we know, okay, we're going to keep our puts. Right now, we're looking kind of bearish. If we can break the bottom of this first deviation, I'm going to add to my puts because that's going to be my full confirmation that the trend is now bearish. So the next candle didn't really do much. It just kind of stayed the same. But if you can notice, it shows a bearish sentiment. It is a bearish hammer, shooting star, whatever, candle you want to call that. So I'm holding my puts. Now the next candle, it broke the bottom of the first standard deviation. And again, that means that the trend is now bearish. So I'm adding to my position here. And as long as it trades in between the top, or I'm sorry, between the bottom of the 1 and 2 standard deviation, I'm keeping my puts because the trend is bearish. Now, as soon as it breaks the bottom of the 1 standard deviation, I should consider selling my puts at this point because now we just rode puts all the way down here for profit. But if we want to keep it and see if it's going to go down more, let's see how it plays out. Now that the next candle is trading in no man's land, we have to have the top of the 1 standard deviation as our sell point. Now, if this stock goes through no man's land, breaks the mean and breaks the top of standard deviation 1, we're selling right away. And why is that? Because any trading in this area is considered bullish. So let's see what happened here. If we would have held our puts, we're moving up. And now the stock is in bullish territory once it opened here. Give me 1 second, guys.
Handling
Crypto is
murderous
pumping right
thoughts.
now.
Please hold.
Sorry, guys, I have dogs. So as I was saying, once the stock broke no man's land and became trading in between the top of the 1 and 2 standard deviation, it became bullish. And as you can see, the trend stayed bullish, dropped in no man's land a little bit, but it never broke the mean, came back up and regained bullish territory. So that's how you would have played puts at this point if you would have brought puts here. And that's essentially what the Bollinger Band is. It's your entry and exit points, identifying overbought and oversold positions. And the reason why is because the Bollinger Band plays off something that's called mean reversion, meaning that when something is so extended far from the mean, it's bound to come back towards it. So that's how standard deviations work with the Bollinger Band and how I personally use them. I don't know if you guys have any questions or anything like that. I can't see the chat, but
I think
That's a
what you
good
covered
question,
it was
guys.
really good. One question I have is, how do you have the 1 standard deviation lines in there? Like, I know how to get the regular Bollinger Bands, but the ones that you have on the inside, the red lines.
yeah, so when you click on your Bollinger Band study, you just have to change the
Yeah.
standard deviation to 1. And then I like to change the color because obviously it's going to leave it white as you see here. And then it's just going to fade directly into your second one. You're never going to see what's what.
Yeah, I like that.
Um,
Being able to see the 1 standard deviation is definitely, it's nice because the way you were saying, the way it indicates bullish and bearish and no man. Like I think I can identify without it, but I think that makes it a lot easier to see the point where it's coming into play.
Yeah, so like how I showed you earlier, you can see that it's trading in no man's land here, and the Bollinger Bands are super tight. That's consolidation area. So this is when Visa is on watch. This is when you want to see, okay, is it going to break the bottom of the 1 standard deviation on the daily, and now the trend is on a long-term bearish, or you want to swing puts? Or is it going to break to the upside and you want to swing calls because it's trading in between, the top and the top of the 1 and 2 standard deviation? So if you can see, it clearly helps you identify the trend more accurately on what's a consolidation, what's in bearish, and what's in bearish and what's in bullish.
Oh yeah. Thank you, Gabe.
I have a question.
Yeah.
I noticed you're using the 6-month time frame. Can you use this on any time frame or?
Yeah, as I showed earlier, you can use
Okay.
it for scalps. So for instance, if we were playing Visa today, I like to use a 3-minute. My example that I showed earlier was Visa at open. If you looked at it at pre-market, let's toss some pre-market extended hours on there. So okay. Let's take extended hours off. All right, there we go. So this is 5:14, 9:30 Eastern time in open. So if you notice that this candle at open, you notice that it's outside of the Bollinger Band, right? Which tells us what?
Overextended.
Exactly. So overbought means that it needs to be brought back inside the Bollinger Band. Means of reversion. Anything that's extended so far from the mean has to come back down. The same thing with, the law of physics. Anything that goes up must come back down, right? It's the same exact thing here. So when you see that Visa opened here, extended outside of the Bollinger Band, your first thought at open is, I want to scalp puts. Now, when you're thinking, and obviously you want to plan this all out before open, but if you're planning scalps, now you're thinking, okay, if I'm planning scalps at open, what's going to be my levels? My first level is the top of the standard deviation number 1. Okay. If it breaks that, my next level is the mean of reversion. If it breaks that, my next level is standard deviation bottom number 1. If it breaks that, my next level is the bottom of the Bollinger Band, which is standard deviation 2. Now, if those puts come down here, you're selling your puts, right away.
Yeah.
Because exactly what's going to happen is reversal. Why? Because mean reversion. It's so extended far from the mean, it has to work its way back in. Doesn't mean that it's going to always come back and hit the mean. It just means that it has to come back in.
Gotcha.
So
Right.
if it comes back in and you're playing calls, how we're going to play calls at this point? Our first resistance is the bottom of standard deviation number 1. It breaks that, we're not adding or doing anything to the position. This is resistance number 2. We're still not doing anything if it breaks. If it breaks the top of standard deviation number 1, then we're going to add to our position, because that's conviction that if it trades in this area, it's going to stay bullish. Now, if it breaks, your call starts breaking the top of standard deviation number 1, at that point, you want to maybe trim, maybe you want to sell your whole position and see how it plays out. Maybe it's going to bounce. Maybe it's going to go all the way back down in range trade. If you see Visa, for instance, here, this is what we call Bollinger Band range trade. Bottom to top Bollinger Band, to bottom Bollinger Band, to top Bollinger Band, to bottom Bollinger Band, to top Bollinger Band, to bottom, to top. And then now it's staying, right now, Visa is in a bullish trend. Like if you can see here, it's trading in between the 2.
Right.
And if you day traded Visa, let's say you bought it, here when it bounced off the top of standard deviation number 1. that's confirmation now in this zone that it's bullish. So if you bought puts for scalp, that was your sell area. Converted to calls, you would have been writing calls 10 minutes into open all the way till now. All cash money right now. And it's telling you exactly what the trend is, that it's bullish, 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 all the way, all day. It's just been bullish for Visa.
Cool.
Quick question. I was like itching to say this real fast. Actually, man, I think RLC is about to do the same thing again. Look, if you look at the history, it's at 989. I think this is about to be a ride up to even higher high. It did. If you look at the chart from literally 2 days ago, it's identical. I don't know. I'm about to let it rip. I just want to let everybody know. Like,
Now,
It-
man,
Okay, he's
at 90.
teaching SD. Continue, Gabe.
I mean, I'm answering questions right now, so it's up to you guys if you guys have more questions. I see the chat. There's 5 comments in there, but again, I don't have the chat.
I don't think anyone asked a question in the chat.
Okay.
Just to share the settings, but you already went over that.
You know, and again, Bollinger Bands are, you know, a way to either you ride the momentum with calls or you ride the fade down with puts, and it lets you just identify your entry and exit points. And when you're in a call, when to sell, when you're in a put, when to sell, when the trend is reversing. But if you notice, you know, I use it with other indicators. So if I had Visa, let's say I was swinging Visa and Visa opened up extended outside of the Bollinger Band. I know for a fact that by the means of reversion and what the Bollinger Band stand for, it's going to come back inside the Bollinger Band towards the mean. However, if I look at my other indicators, I'm looking, if you notice on the screen, that candle is showing to the left of those lines. I guess I gotta zoom in a little bit. All right, I'm on my laptop. I don't know how zoomed in you guys see this, but this candle here, my RSI on the bottom is going up. My MACD is showing green candles underneath, so that means positive. And the MACD is also crossing to the upside. So I know that it's staying in a bullish trend if I was swinging Visa. However, if I wanted to scalp Visa, I can do that very quickly at open because I know that it's going to go down. But I'm not going to get faked out on my swing and think, oh my God, Visa's selling off. I need to sell my swing for either a loss or, you know, I cut my profit short. It's telling me that it's in a bullish trend. And as you can see, the Bollinger Bands are getting wider in an uptrend motion. That also signifies bullish trend. Along with trading inside of the 2 standard deviations, that's also another bullish trend. So all those are indicators of bullish trend. So I'm keeping my call and I'm saving it. And then what happens if I would have done that? I would have been even in more profit because now Visa is running. Great live example right here. The Bollinger Bands are getting wider. And what is it doing? It's not extending outside of the Bollinger Band. It's riding the top of the Bollinger Band and it's trading in between standard deviation 1 and 2. What does that mean? Bullish. The time to buy that would have been this confirmation candle right here that did not break the overbought territory and it did not crash into no man's land. That would have been the perfect candle to buy at that point. And then you're riding it in between the standard deviations all the way up. Any other questions out there?
Good job, Gabe. Nice lesson.
Hopefully you guys learned something with Bollinger Bands.
I'm sorry, one last thing. When is it not wise to use Bollinger Bands? Because I've heard there's certain times where Bollinger Bands can be like dangerous to use for like certain trading methods.
As I mentioned earlier, you never ever want to use Bollinger Bands by itself. You never want to use it as your sole indicator because it's only telling you about the price action and volatility. It's not telling you anything else other than that. And you need more indicators. So that's why I showed with like the MACD and RSI with the Bollinger Bands to give me extra confirmation. That's why I used both standard deviation 1 and 2 to give me better reassurance on my play and my trend. But other than that, you should use Bollinger Bands when you're in a position or thinking about getting in a position because it's going to let you know whether or not you know, you're getting into or out of a call or position at the right time. If I take Bollinger Bands out of the equation here, if Visa opened up here and I wanted to buy Visa for a scalp, and I said, oh my God, Visa gapped up, I'm going to buy Visa calls right at open. Guess what? By this candle, you're definitely scared shitless when it's all the way down here and you're trying to scalp. You're already out. And you know what? If you would have used Bollinger Bands, it would have showed you that maybe that call up here wasn't a good idea, but you should still hold it because we're going to stay bullish. But you can't see that because it's still trading below the VWAP. You don't have the Bollinger Band as confirmation. You know what I'm saying? It's a tool that's great to use, just not by itself, but you should always use it when thinking about entering a call or looking whether or not you should leave a call or put.
Okay, so it's like a good way to realize, like, not solely by itself, but how much even like real profit there is in a move. Like what are my margins?
Not really the profit. It more tells you the trend, whether or not you're riding a position that is overbought or oversold, and more or less what may happen to the stock moving forward, which is, you know, essentially trend movement. Is it going to trade in between? You know, let me just go back up here and just throw regular Bollinger Band real fast. Is it going to, you know, come back inside the Bollinger Band? You know, should I buy puts? And then is it going to trade? Imagine if the one standard deviation here, is it going to trade in between the top of 2 and 1, which means that it's going to stay bullish, or is it going to break down and trade down here, which means that it's going to be bearish? So, you know, you don't want to use it by itself, but use it with other things to determine whether or not you need to enter a put, sell a call, or add to a position, or however you want to play a position. But essentially, it lets you know momentum, trend movement based on the price action that you see. And it just helps you identify more accurately whether or not you should enter or exit a position at a certain point.
Cool. Thank you, man.
Yeah, dude.
Awesome.
Hopefully you guys learned something today on Bollinger Bands. I use Bollinger Bands on everything. So all my entry and exits for scalps, I use them for swings and all that stuff. Like I showed you the Visa swing, when Visa was on the 6-month daily, that would have been, you know, the perfect time to purchase swing calls. You would have swung, and if you would have, you know, hit all those levels with the standard deviation and all that stuff, you would played the swing calls all the way to the top here and would have cashed out, made big. You would have known to play puts when you were up here. You would have rode this all the way down, and you know, you would have cashed out. So I use Bollinger Bands a lot. So if you guys ever have any questions on them, let me know. You'll notice whenever I do TAs, I always talk about the Bollinger Bands for my entries and exits. You know, and hopefully you guys learned something with this today.
That was great. Thanks, Gabe.
No worries, guys. So I'm off to go meet Alec in Tampa and go do some hard rock. I hope you guys enjoyed the rest of your Friday, and thank you guys very much for allowing me to share with you my knowledge on Bollinger Bands. I really appreciate it, and I really would appreciate if you guys have any questions or anything, please ask me, because you guys aren't bothering me when you guys are asking me questions about stuff like this.